Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 19th of February. Starting with the FTSE 100, which gave us a bear trap rebound from below the 200-day line. That was around 75.45 and shot through the rising 50-day moving average, which is very nice. Above a recent resistance, basically 7,700, looking for 78.30 in the top of that rising August trend channel. After that, we can dream of dizzier heights. Moving on to the DAX, and here, good to see this market getting through the 17,000 level, gapping up through it, in fact, but dithering a little bit today. Nevertheless, while we're in this rising trend channel from October, the floor of which is around 16,900, we're still looking for up to 18,000 in the top of the channel by the end of next month. Obviously, the angle of ascent could be slightly less, and the target could be slightly less, so 70,600, 700, but basically the message there is of further upside, especially while we're above 16,900. Moving on to the Dow, which apparently is closed today, which is very disappointing. Here we've got the rising trend channel from October, the top of the channel there, going for a rather unlikely move towards 40,000 plus by the end of next month, but obviously recent resistance at 39,000 is the level to break. But at least here, while we're above the 50-day line, 37,700, still looking for a target towards the 40,000 area. Moving on to Bitcoin, which has done us proud in the recent past, probably got to wherever it's got ahead of schedule and looks like it's going to do more as well. 53,000 is the top of that rising August trend channel, looking for up to 60,000 by the end of next month, while we remain above the old January resistance around 49,000. Worst case probably at the moment around the 46,000 level, which was well, there was a little bit of support there on the way up. Moving on to gold, and you can see that we've had a bounce basically right on the $2,000 level. We could have gone down to 1983, which is where the 200-day moving average is, but we've managed to bounce above that. And I suppose you've got to add in the other two bounces we've had above the 200-day line, which is rising as a signal that we are going to head significantly higher. The initial level to break the 50-day line, 2040, then the 2060 level, the December resistance line, and then hopefully by the end of next month or some kind of time frame like that, up to as high as 2180. But we're hoping that this is the final bounce on the right side of the $2,000 level. On to the stocks, and we're starting off with Energy Pathways, which after a almost straight decline from the IPO price has managed to give us a bear trap rebound from below 2.8 pence. We've broken a line of resistance there from the beginning of last month at 2.8, and the longer we stay above that, at least there's a chance now of getting back to former resistance on the way down at 3.7 pence, hopefully by the end of this month. But the first signs of a turnaround there, with a bit of bullish divergence there as well in terms of the RSI, with a lower price low, but the RSI remaining the same on the dip. Falcon is next, and here, accompanying the news, we managed to hit the top of the range in our resistance line target one, the red one there at 10 3/4. Above that, we're looking for a fresh leg to the upside, probably in accordance with the line I've drawn from the beginning of 2022, in fact, heading for 13.5 pence as soon as the end of next month, while we remain above 10.5 pence. I think that would be fair on that situation. Moving on to Hornby, which is managing to push its way higher after the break of the 200-day moving average at 18 pence. That's quite impressive. Our initial target there was around 24 pence, but obviously we've come down a long way, so looking for 24 pence initially, hopefully by the end of this month, and then a late 2022 resistance line projection at 36 pence, ideally by the end of April, something like that. But looking encouraging there, and staying above the old neckline resistance at 20 pence is what we'd like to see on that situation. Moving on to Kefi, which has speeded up its frequency of RNSs, and that also seems to have helped the share price, breaking through both the falling 50 and 200-day lines at 0.65, which is quite impressive. Above that 200-day line, 0.65, looking for up to 0.77 by the end of this month, and a bounce for the RSI at neutral 50 as well. So it does suggest that finally there might be a bit of a move back towards the top of that rising trend channel from June. On to Microsolt, which has been, I suppose, the big highlight of 2024 to date. And here we have a situation where we achieved all our previous targets. We might be getting a little bit tired now. The top of the channel there, previously 105, is now up to around 112. So above, there was, let's say, the 110 pence level. Still got a chance of heading up towards £1.40, but maybe this situation needs to cool off a bit. Upside valid anyway while we're above 90 pence, which was the big resistance ahead of the spike towards 120. Any dips towards the £1 area now, and Friday support probably for aggressive bulls only. Moving on to a stock which was a rather unlikely winner, Petards, and here you can see that it's gapped through its 200-day moving average, which should mean that the 8 pence or an 8.25 pence target is basically a done deal. We've already had what's the third gap to the upside now, so 8.25 the first target, and we're looking for up to 13 pence as the target by the end of next month, and ideally we stay above the 200-day line at 6.25 in the meantime. Another left field situation is Space and People. Here we've gapped off the lows, which, as we have seen many times, tends to be a decent signal. Bear trap gap reversal. Looking for 90 pence initially, maybe up to £1 by the end of next month. End of day close above the 200-day line is what we're looking for, and for it to remain above that level in the meantime. One of my childhood ambitions was to write for the Midas column, but it would seem that they're a little bit slower off the mark now than I have been on Synectics. Here you can see we had a bear trap gap reversal, one of our best signals, and that was basically calling the stock up from the 130s, 140s. Another gap up at the end of last month, which obviously did its work as well. Current situation is above 180, one of our previous targets. We are looking for up to £2.20 by the end of next month, but the key here is staying above 180 despite the newspaper tip. Moving on to Sound Energy, which looks like it's finally gathering some positive momentum as well. Here the shares have been dithering for quite some time, but it looks as though they're finally getting out of that congestion. Above 0.8, looking for 1.2 pence by the end of next month at the top of that broadening triangle from back in September. A couple of stocks to revisit as well. Coming up next, bear trap gap reversal there with Touchstone. You can see that through the 50-day moving average, which is very pleasing, as is the way that, in fact, if you look closely, there was a gap down there. So it's a bear trap island reversal, and that tends to be one of the strongest signals around. Looking for 65 pence by the end of next month, while we remain above the 45 pence 50-day moving average level. So hopefully that will deliver the goods. Tower Resources, another situation which might be finally waking up after being in the doldrums. Here you can see these very strong, solid 3 candles that we've had. We're now above the 50-day moving average at 0.021, looking for 0.035, maybe as soon as the end of next month, if we can get some decent momentum above the 50-day line. Wildcat I talked about yesterday, and today the company talked about itself via an RNS, which is very nice. Here the key is to break and hold above the 200-day line. That's around 0.31. So we want to see an end of day, we want to see end of day closes above that to then call the shares up to 0.45 on the top of that rising trend channel base that we've had since September. In the meantime, the ideal scenario is that we stay above at or above the rising 50-day moving average at 0.25. So above 0.25, looking for 0.45 still on Wildcat. Finishing off with Wishbone, and here things looking a bit better. Managed to break through the 200-day moving average. We tended to find that as resistance in the past, but this looks like it actually might have legs. And initial target here, the 200-day line, 1.87 pence. Hopefully we'll see that even as soon as the end of this month. Ideally, we stay on the right side of 1.3 pence in the meantime. That's it from me today. More updates tomorrow.